Welcome to Abidi Stock Market Learning. The beginning is most important. In this video, we are going to cover 8 topics related to Recession 2023. List of the topics are as follow. Topic number 1, what is recession? Topic number 2, what is the difference between recession and the depression? Topic number 3, what causes recession? Topic number 4, can India escape the difference of global recession? Topic number 5, does economy policymaker must fight against the inflation and the recession? Topic number 6, advice for surviving a recession. Topic number 7, how to financially prepare for recession. Topic number 8, how to invest on stock during the down market. Let's start with the topic number 1. What is a recession? A recession is a broad decline in a economical activity. It is commonly understood as a two consecutive quarter of a contracting GDP. However, the precise definition is unsettled among the economists. Economists also disagree about when a recession begins and when it ends. The Indian stock market has had its share of highs and lows, with the most recent lows being the global recession of 2008. While the Indian stock market was not as badly hit as the other market around the world, it still suffered losses of nearly 50%. In the years since the recession, the Indian stock market has made a strong comeback, as is now once again one of the fastest growing markets in the world. Indian stock market has been hurted by the coronavirus, and every sector has been hurt by the coronavirus, which gradually affected their performance from 1st December 2019 to 31st March 2020. Nifty 50 and the Sensex both took a dip of approximately 32% and the 31% respectively, which is a result of bad performance of most of the sector in this pandemic. However, there are the signs that another global recession may be on the horizon. If this recession occurs, it is likely to have a significant impact on the Indian stock market as well. Moving on to the topic number 2, what is the difference between the recession and the depression? A recession is a period of time where the economy contrasts. This is typically measured by the GDP, and where it dips below zero, this is considered to be a recession. A depression, on the other hand, is an extended period of time where the GDP dips below zero and stay there for a longer period of a time. Let's quickly understand. A recession is usually limited to one country or region in contrast to the global recession. A recession usually lasts less than 2 years, whereas the depression can last up to 10 years. Moving on to the topic number 3, what causes recession? A recession is usually caused by a significant disruption in the normal flow of goods, services, and the capital. The most common causes of a recession are: a recession caused by an external shock, such as war, would likely have more severe and long lasting effect than a recession caused by the internal factor. It is also possible that a recession caused by external shock may be shorter than a recession caused by the internal factor. A significant decline in spending could result in a significant decline in GDP. A recession could also lead to rising the unemployment rate, declining the rate of investment, and a declining in the value of household assets. A significant decline in the household spending would likely result in a major decline in the demand for goods and services. A significant decline in a demand for goods and services would likely result in a major decline in a production. A significant decline in a production would result in increasing in the unemployment rate. A significant decline in the householding spending would also result in a significant decline in a tax revenue. A significant decline in a tax revenue would likely increase the federal budget deficit. Sustained high unemployment rate and a significant decline in the value of the householding asset could also result in a significant decline in the householding confidence. A significant decline in the householding confidence may decrease the demand for new home loan, increase the investment rate of saving, and the result in a decline in commercial and the residential investment. There are many more theories as to what many causes on economy to go into the economic slowdown. Some factor has been identified that may cause an economic slowdown in the country that ultimately result in a recession. Let us take a look at some more such factors. High bank rate. When the rate of interest is very high, there is no much liquidity in the market, so the level of investment will fall, causing an economic slowdown. We saw this in 1980 in the USA when the rate was raised to fight stagflation, but instead, this resulted in a recession. Stock market. In a bear market, the investor will pull money out of the market. This will drain the capital out of the businesses and cause an economic slowdown. Crashes in the stock market are very harmful to the economy. Housing crisis. When the price of houses fall, the owners start losing equity. They cannot pay their mortgages or take secondary mortgages on their home. They may lead to the foreclosure. This was the cause of the Great Recession of 2007. Economic scandal and fraud. Sometimes banks, large corporations, and even the government institution employ questionable practices and illegal activities to boost the profitability. When such schemes and the scandal are exposed, the entire economy suffer. Take for example the current financial scandal of Sahara, Vijay Mallya, Nirav Modi, and many more in the country. Effects of war. We generally see an economic slowdown after a war. It is the generally after effect of the stress of a war cause an economic slowdown. Deflation. Deflation is opposite of inflation. Here we will see a general decrease in the price of commodity and the services. This encourage the consumer to wait until the price to reduce further. This can cause a recession in the economy. Falling wages. When the wages and the salary of a worker do not increase with the same level as the inflation in the economy, the purchasing power of the public will reduce. He will not be able to afford the same goods and services which he used to. This can cause an economic slowdown. As per my understanding from the past recession, this event can cause a recession because they disrupt the supply of money, the flow of goods and services, and the normal pattern of investment. However, it is important to note that not all the recession are caused by the external event. In fact, many economists believe that the majority of the recession are caused by the internal factors. Moving on to the topic number 4. Can India escape the effect of global recession? The effect of global recession, which according to the many economists will last through the entire year 2023, will definitely not leave India unscratched. Lower commodity price would partially offset the negative effect of the recession on the economy. Every country is feeling the effect of the Russia attack on Ukraine, from United States to Europe, the Middle East to South Asia. In addition to the deadly effect of COVID-19 pandemic, the most recent geopolitical disaster has brought the world to its breaking point. The Fed rate hike are aimed to cool an overheated US economy and force people out of a work, putting a downward pressure on wages and inflation. India's economy has been moderately integrated with the global economy, but it is not invulnerable to the US or the global recession. According to the data, India contributes the relatively small amount to the world export, and even when it comes to GDP, it is still low when compared to the other nation. However, the trade route will have some effect on India. Five countries together account for about 30% of India's total export, including the USA and the European Union. Additionally, a significant portion of international export are depend on the USA. The United States percentage of India's export of good increased as compared with the last decade. A US recession will undoubtedly have an insignificant negative effect on the India's software export margin and the employment in the service sector. Foreign portfolio investment, fund flow, the forex reserve, and the rupee have already begun to impact by the Fed rate increase. As the dollar keep getting stronger, the following the Fed most the recent increase the basis point, the declining rupee is coming under a new pressure. A rupee is falling to a new low because of raising the crude oil prices, continued Fed rate hike expectation, and expanding the current account deficit. The rupee is falling to a new low because of rising the crude oil prices, continued Fed rate hike expectation, and expanding the current account deficit. The rate cycle of RBI may not be opposite to the Fed, and the rate increase will undoubtedly have an impact on the Indian economical growth. Even though India's economy is not fully integrated with the global economy, the policymaker cannot ignore the global headwind. A moderate growth rate of around 5% would still rank India as having the fastest growing economy. However, millions would still be forced into the poverty. The poorest people will be hit the hardest by rising inflation as a result of currency depreciation and winding the twice deficit, which will further fuel it. Moving on to the topic number 5. Does the economy policy maker must fight against the inflation and the recession? The central bank should persist in the efforts to control the inflation, and it can be done without touching of a global recession, the study finds. But it is required the concrete action by a variety of policy makers. Central bank. Central bank must communicate the policy decision clearly while the safeguarded their independence. This could help the another inflation expectations and reduce the degree of tightening needed. In advanced economy, the central bank should keep in mind the cross-border spillover effect of a monetary tightening. In emerging market and the developing economy, they should strengthen the microprudential regulation and build the foreign exchange reserve. Fiscal authority. Fiscal authority will need to be carefully calibrate the withdrawal of the fiscal support measure while ensuring the consistent with the monetary policy objective. The fractions of country tightening the fiscal policy next year is expected to reach it the highest level since the early 1990s. This could amplify the effect of monetary policy on growth. The policymaker should also put in place the credible medium term fiscal plan and provide the targeted relief to the vulnerable household. Other economic policymakers will need to join in the fight against the inflation, particularly by taking the strong step to boost the global supply. This include easing the labor market constraint. The policy measures need to help increase the labor force participation and reduce the price pressure. The labor market policies can facilitate the reallocation of displaced worker, boosting the global supply of commodity. The global coordination can go a long way in increase the food and energy supply. For energy commodity, the policymaker should accelerate the transactions to the low carbon energy sources and introduce the measures to reduce the energy consumptions, strengthening the global trade network. The policymakers should cooperate to the alleviate the global supply bottleneck. They should support a rule-based international economic order on that guard against the threat of protectionism and the fragmentation, which could further disrupt the trade network. Moving on to the topic number 6, advices for the surviving a recession. There are many steps which you can take to survive a recession. Here are some of the most important ones. Stay positive. It is important to keep a positive outlook on the life during a recession. Studies shows that the people who are positive about the future are better preparing for the challenges and tend to have a better financial outcome than those who are not. Stay informed and educated. It is also important to stay informed and educated about the current state of the economy. This will help you to the better understand the challenges that you may face and will allow you to make the better financial decision. Get out of the debt. The best way to prepare for a recession is to get out of a debt. Having debt will only hinder your ability to respond to the recession. If you are currently in debt, it is never too late to start repaying your debt. Maintain a healthy lifestyle. It is important for both physically and the financially health. Get involved into your community. getting involved in your community and get back to those in need. This help you to be a more resilient in the time of uncertainty. Get creative with your budget. The best way to survive a recession is to be prepared for it. Therefore, it is important to creative with your budget to make sure that you have the enough to survive and thrive. Learn from the past recession. Although no two recessions are the same, it is useful to study the past recession to get a better idea of what challenges you may face. Keep an open mind. It is useful to have a game plan, but it is important to be flexible enough to adapt to the challenges that you are facing. Don't forget to celebrate the success. Moving on to the topic number 7, how to financially prepare for a recession. Start saving now. A recession may be unavoidable, but it is important to note that we cannot predict exactly when it will occur. Therefore, it is important to prepare for any and all economical challenges which you may face. The best way to do this is to start saving now. Start by setting aside a small amount of money each month. Even small saving can add up over a time. Once you have a small saving cushions, you will feel much more confident knowing that you have something to fall back on if needed. Regularly monitor your finance. A recession is one of the most common reason for the budget shortfall. Therefore, it is important to review your budget now to see if any adjustment need to be made. Monitor how much money you spend each month and how much money is coming in. If there is no enough money is coming in, then it's time to make a change. Always have an emergency fund. Another important step that you can take to prepare for a recession is to build an emergency fund. Having an emergency fund can help you weather unexpected economical challenges. Emergency fund should cover your expenses for at least 3 months or more. Make a reasonable budget that helps for you. How much money comes in per month versus how much goes out. Repay your high interest debt first. Have an additional income sources. You may need the additional source of income during the recession. If you are invested on the stock market, then you have to diversify your investment like investment on gold, real estate. You can work on the part-time work or the freelancing job to support your earning. Start investing for the long term. If you have not started investing, then start investing for the long term. It will help you when the economy will rebound back. You need to wise knowledge to invest on the rebounding stock market to get a good return apart from your regular job income. Make sure the investment does not have to be complicated. Diversify your portfolio. Your portfolio must not suffer heavily from the market downturn. You can invest in the proportion on gold, mutual fund, commodity, real estate. Tangible assets tend to perform well when the market are underperform. You can also make a dividend paying stock as it can help you to earn an alternative source of income. Moving on to the topic number 8, how to invest on the stocks during the down market. Warren Buffett has a track record of outperforming in a bear market. He has historically employed a low risk, value invested mindset, finding high quality company that are trading at a fair value, which has paid off especially in the down market. Not surprisingly, the investors are paying close attention to the Buffett moves and study his psychology in his uncertain market environment. Be greedy when others are fearful. Buffett's best known saying may also be his most useful. The Oracle of Omaha is known for advising investors to be greedy when others are fearful and fearful when others are greedy. In other words, the investor should be aware of the market sentiment and that the best time to buy a stock are often when it least in the favor. For new investor, especially it is easy to get catch up in the prevailing market trend, but the best way to find success is to go against the flow. The following graph illustrates the economy of fear and greed. As you can see, when the greed is high and the fear is low, the investment is high. However, when the fear is high and the greed is low, the investment is low. There is a plenty of opportunity to apply that the philosophy in the today's market, as the number of stocks have fallen sharply over the last year, especially in the tech sector where the pandemic tailwinds have faded and recessionary and the inflationary headwind have mounted. Buy the dividend paying stock. It is not secret either that the Warren Buffett is a fan of dividend stock. While not all the Berkshire holding pay dividends, the vast majority do, including all of its 10 holdings. Dividend gives the Berkshire way money to reinvest in the Buffett's favorite stock and to make outright the acquisition. But there's another reason Buffett's favorite income stock. Dividend payers tend to outperform non-dividend payers, especially in the bear market. Many dividend stocks are defensive by nature, meaning they outperform in the down market. Paying a dividend is a sign of profitability, and the profitable company tend to do a better job of withstanding recession. A high dividend yield also acts as a floor on the stock as yield goes up as the stock price falls. Do not time the market. Success in investing doesn't come from making accurate prediction about the direction of the market. It means buying high quality stocks that are trading below the intrinsic value, and the quote above shows that the Buffett will prefer to spend his time making those decisions and the analysis businesses rather than predicting the direction of the market. Of course, every investor would like to get into the absolute bottom, but that's not possible. You are better off the dollar cost averaging into your stock, buying a bit at a time or take a regular interval. While no one know what the stock market will do in 2023, applying a Buffett principle may help you can find success. Buy stocks that are oversold on irrational fear. Add a few dividend payers and invest instantly rather than try to time the market. Before winding up from the session, now here are the few questions for you for recession 2023. As you all know that high inflation, rising interest rate, high CAD and the currency depreciation, geopolitical tension, the global economical slowdown, festive demand decrease, an uneven monsoon, and the K-shaped recovery. This list definitely not exhaustive. This variable does not only affect the market but also affect each other. In my view, it is impossible to predict the short term and the mid term direction of the Indian stock market. What do you think? Still, job layout is happening across the globe will be the strong signal towards the recession 2023. Furthermore, IMF Managing Director has warned that one third of the global economy will face a recession in the year of 2023, predicting that the world would face a tougher year in 2023. Do you think the United States of America, European Union, and the Chinese economy all slowing simultaneously? What is your suggestion how India can deal with the recession 2023? What steps should Indian economists take to upcoming parliamentary budget to prevent from the recession 2023? Recent new coronavirus variant from China could drag down the worldwide economic activities. While in Indian stock market, with the Sensex having losses over 3,400 points from all the high of approximately 63,500 touches on 1st December 2022, bearing seems to having an upper handed in the stock market. What could make a matter worse just got the louder in the warning from the World Bank that the global economy would easily dip into the recession in the year of 2023. What do you think? Does the Indian stock market like BSE and NSE will go down during the recession in 2023? As you all know that IT sector and the pharma sector has shown the tremendous growth during the COVID-19 pandemic era. What do you think which sector will grow during the recession in 2023 in Indian stock market? Please write your suggestion in the comment section. That's it for the video. You should take your time to understand all the concepts discussed in this video. Take your notes and go back from time to time to review the strategy which has been shared with you. Please subscribe to our channel and click on the bell icon to get all the notification for our upcoming videos. Please like the videos and provide your comments if any. If you think the comment of the video are knowledgeable, then please share this video with your colleagues and friends. Once again, thank you for watching the entire video.